Welcome to Global Nexus. Please subscribe and hit the bell icon for more breaking updates. It all began with a dummy, not a politician, but an actual literal crash test dummy. On a regular Tuesday in Shanghai, Chinese engineers unveiled a state-of-the-art crash test dummy designed specifically for the Chinese population. This wasn't just a technical milestone, it was a wake-up call for Europe's auto industry. For decades, Western companies, mostly from the US, Netherlands, and Austria, held a near monopoly on crash test dummies, setting global safety standards and charging a premium. China, tired of paying for dummies that didn't reflect its own people, decided to build its own. The unveiling signaled a major shift. China was no longer content to be the world's factory. It wanted to be the world's laboratory and supplier. The implications were immediate. Billions in future profits for European firms suddenly looked uncertain. This wasn't just about dummies, it was about technological independence. Europe, once confident in its dominance, now faced a new reality. China was ready to set the pace. The crash test dummy became a blunt metaphor for a broader shift in global tech power. Europe thought it was in the driver's seat, until China quietly built a better steering wheel. Now, Europe faces a choice: adapt or fall behind. The game has changed, and the continent can't afford to ignore it. For years, if you wanted to sell cars globally, you had to use dummies from a select Western club, companies like Humanetics and TAS International. These firms set the gold standard, guarded their technology, and kept prices sky high. China, the world's largest car market, was a major customer but also dependent on foreign tech for safety certification. That dependency was costly and slowed innovation, so China invested heavily, reverse-engineered Western dummies, and then improved them, tailoring them to Chinese body types for more accurate safety data. This wasn't just about pride, it was about better science and safer cars. The result? A decades-old monopoly shattered. China isn't stopping at its borders. It's pushing to set new global standards, inviting the world to adopt its technology. The old European club faces a new reality. China has brought its own table, and everyone's invited. The message is clear: adapt or be left behind. The era of Western dominance in crash test dummies is over. Crash test dummies aren't simple mannequins, they're million-dollar marvels packed with sensors, critical for saving lives. For years, Chinese automakers funneled billions to Western firms for these essential tools. Now, with homegrown dummies, that money stays in China, fueling its own tech ecosystem. China's not just matching Western tech, it's racing ahead, developing next-gen dummies with even more sensors and realism. European firms, once complacent, now find themselves in a race they didn't see coming. The stakes are high. Whoever sets the global standard for safety tech will shape the future of the auto industry. If China's dummies prove safer for more people, global car makers may have no choice but to follow. Europe risks being forced to license Chinese tech, or risk irrelevance. The world of safety tech is being rewritten and Europe's dominance is on the line. The question: can Europe catch up, or will it be left behind? The race is on. The tech shift isn't just physical, it's financial. European investors are sending capital east, betting on China's booming tech sector. In 2025, Hong Kong IPOs raised nearly $28 billion, driven by Chinese AI and autonomous driving giants. For European fund managers, the choice is clear: invest in slow-growth Europe, or in China's dynamic tech ecosystem. This capital flight fuels a vicious cycle. China's tech firms get stronger, while Europe's startups struggle for funding. Europe faces a double squeeze. Outcompeted by US giants, outpaced by China. Investors see China as the new safe haven for tech growth, despite political risks. The real danger? Losing the financial backbone needed for innovation. Without capital, Europe's dreams of digital sovereignty are just that: dreams. The money is following the action, and right now, the action is in China. Every euro that leaves is a missed chance to build Europe's digital future. The anxiety isn't just in boardrooms, it's in Europe's halls of power. At a Berlin summit, leaders like Macron warned Europe risks becoming a digital vassal to the US and China. Regulations like GDPR and the AI Act mean little without homegrown tech giants to apply them to. Europe's problem: it's a market for tech, not a creator. Citizens use American social media, store data on US servers, and drive cars powered by Chinese systems. The fear is geopolitical as much as economic. Control over data and AI means control over the future. Europe's leaders finally admitted, the continent is a tech consumer, not a tech creator. The risk isn't just falling behind, it's losing autonomy. The Berlin summit was a wake-up call. Europe must change course, or accept permanent dependency. The age of digital innocence is over. The time for action is now. Faced with digital decline, Europe's leaders are scrambling for solutions. Macron called for a Franco-German reflex, a united push to revive Europe's tech industry. The plan cut red tape, unify digital markets, and make it easier for startups to scale across borders. Deepen capital markets, so innovators can access funding without relying on US or Chinese investors. Prioritize European firms in public procurement, using state power to guarantee markets for homegrown tech. It's strategic protectionism, designed to help European champions grow. But the plan faces hurdles. 27 countries must agree, and protectionist policies risk trade conflicts. Still, urgency is high. European companies are forming alliances, investing in R&D, and adopting agile models. The blueprint is there. Now Europe must act. The race isn't over, but Europe is starting from behind. Will determination be enough to catch up? The Chinese crash test dummy is more than a tech story. It's a symbol of Europe's crossroads. One path, become a well-regulated but dependent digital vassal. The other, reclaim the mantle of tech titan, shaping its own digital destiny. The next few years will decide Europe's fate. If trends continue, capital and talent will keep flowing east, leaving Europe a digital colony. But a united push, simplifying rules, investing in tech, and using public procurement could spark a new wave of innovation. Europe has the talent and heritage. Now, it needs the will. China's ambition isn't aggression, it's a challenge. Europe can shrink from it, or rise to meet it. The next decade is decisive. Will Europe be a builder or a bystander in the digital age? The choice is now.